All right. Hello, everybody. I am not asleep, as 25 comments are suggesting. We're alive. We're here.
It's not the inflation report, guys.
Dude, to be fair, I overslept 40 minutes. Could you imagine waiting for a live stream like this for 40 minutes? Like that is.
I think Amit. I think the reason why people are reacting because you named that live stream the most important report on the planet, and then you overslept.
The most important sleep.
Dude, literally, it was. Hold on, I want to find it. The most important day in planet Earth, because it was an obnoxious title. Because I was like, oh yeah, look at this. I was like, well, this is the most, and then CPI came in hot. This is the fucking title. I put Jerome Powell on Earth for this thing. The most important day in the history of planet Earth. And then you're just sitting there for 40 minutes like, where the fuck is this guy? Yeah, it was bad. But we're here. I'm here with Arny, apparently the new managing partner at Maddie Capital, Matt, and Vince. And episode number 121, doing this for... That's 52?
Impressive.
Too long.
52 times 2. Oh, we're past 2 years. We're way past 2 years. Okay, so we're into the year 3 of this.
You needed the calculator to make 52 times multiplied by 2.
I've done more impressive.
Sounds like Arny had too much fun in Vegas, is what I'm hearing.
It does sound like that. How about we start with this?
What makes you think that?
Arny, you came to America. You got to
to America.
You got to go to DC, New York, Vegas. How's your experience in America?
Big. Everything in the US is just big, from the sizes of the street. I love that. And I would say it sounds weird to say, but you already see the difference in the mentality of the people. Like one thing is in Italy, you say, oh yeah, but in the US, everyone is so focused, so bam, bam, bam. We are like the chill guys. And actually, that's true.
Yeah, I think one of the things Arny and me talked about is that there's so much hustle and ambition in the United States. Everyone, for the most part, is trying to like build, at least in our finance community, we're all trying to do something. Side hustle, real estate, stocks, whatever. Whereas in Europe, at least Arny was describing that people are just, they make their salary, they're chill, they drink their 17 espressos a day, and they live their life.
Okay, I think the very big difference is the hope for the future. It's something that also Peter Thiel touched, is when you have expectations that things can be really better, you have an incentive to kick. While if you're discouraged by the future because you're like traumatized by the past, it's like, you know what? I just go on and live. And I think that's the biggest difference that shapes culture from the US to Italy. In Italy, it's like if you make the effort, it's like you have everything against you because why are you making the effort? It's like pointless. You have everything. You have the government going against you. You have the social pressure going against you. You're just weird. While in the US, it's like, go, guy, go and fail. You fail? Okay, fine. You'll do another time.
And this is what Karp talks about, right? Karp says we have to protect this idea because as soon as when he goes to the Germans and the Swiss, he says, hey, you guys don't have any tech companies because you don't encourage people to fail and try. And in America, dude, the amount of venture deals I saw this week of companies that got funded 10, 20, 30 million if they're an AI stuff. I'm like, there's so much capital in the US willing to go to just any company that can try to build something. It's just the best environment to be in.
Even if most of the things end up not working or they're just stupid in terms of valuation, all that mechanism that creates, actually, if you go through this madness, actually, you can make it, you can be set for life, is actually what triggers people to innovate. While it is true, like what Karp says is not just stereotypes, sentences, I see that. And that has strong repercussions. Just a little hint before we go on. In Italy, as in all of Europe, there are some sorts of stock-based compensation, but that's typically something that you can potentially receive only when you are like a director or above.
Right.
While in the US, we
You could be a janitor and make some stock-based compensation. You know, it's possible. Speaking of SBC, we'll get into that. Let's start with that. Well, first, before getting into that, Vince, how are you doing?
Why do you ask? I'm good. I'm good.
Okay, Matt, how are you doing?
It's always a great day to be here with you people.
Okay, great. Now that we got that out of the way, let's get into how we're going to make some fucking money. $50 stock. So Arny dug deep into what was it, 10K, Arny, of this?
Yeah, well, the 10Q.
The 10Q, and you went through and found out what's going on. So I'll give it to you, Arny, but basically you found some pretty unique details on what it means for employees to get compensated over the next 5 years if the stock gets to certain levels. What did you find, and what does it mean for us as investors?
I was searching for details of another company I'm studying, and then I noticed a interesting compensation package for the CEO, and then let me think. Wait a second. I remember that last time Palantir had something new in the 10K, that was something like performance RSU. And it was not mentioned in the earnings. So let me check if there is something new there. And actually, what I found was something new there on top of that performance RSU, which is a simple line that potentially changes everything, not only for employees, but also for us, since that creates a very strong incentive. The bottom line is employees the last quarter received a big part, a big package of this stuff called SARs, which are rights that are only valuable under if certain conditions are met. And this specific condition is the stock needs to be $50 just to trigger this, to make it something worth at least 1 cent. So if essentially the stock goes above these $50, then this premium that the employees can receive becomes more valuable. The higher the stock goes, the more it becomes valuable. And there's a cap in order not to bankrupt the company in the case it goes completely mad. But the idea is $50, the employees get the difference between the price and $50. So zero, like $50 is the break-even.
Right.
And if it goes above that, employees receive a premium in cash, given the difference between that price and $50, which means the maximum is 70, and that brings $20 per SAR that the employee can receive.
And so 70 would be a 3x from this current price right now.
Yep. And the interesting thing is if we think of CAGR return needed to achieve this, because this has an expiration of 5 years. So this $50 needs to be reached in 5 years. And employees need to stay in the company for 5 years consecutively. So if they leave before, they don't get anything, regardless of how the stock goes. And the implication, what it means, $50 from here. It means like a 20% CAGR for the revenues, for the stock price, just to get there. 20%, not bad. But if we want, if employees actually want to receive this premium, and the average per employee that they could receive is like 250K, which is a good premium, I would say, the stock needs to be $70. $70 from the current $20 is like 30%.
Which is it's a 300% return from this price in 5 years, essentially.
It's like
not bad at all. That's amazing.
28% CAGR, but since there is also some dilution that goes against you, you need like a 30 something.
We need to grow. It needs to seriously grow for that to compound. Okay, Vince, what was your reaction when you saw Arny dug this up?
2 reactions. One, I really hope a Delaware judge is not going to take this away after the fact when these things have vested, number one. And Number two is I also read after Arny posted it that it was counted with a Monte Carlo method to find the fair value, which based on my understanding is that they simulate different scenarios, and then they go into like what's the the most bullish, what's the most bearish, and then what, like, then they assign probabilities, and then they take like the highest probability. So how do you call it? Like, I think management is thinking that this has a good shot of happening, and that's obviously very bullish based on the calculations that they have made. And number three, I had some questions. So do you already know if they're planning to phase out the stock-based compensation into these SARs so that they're going to go more towards this? Or is this like that they're keeping the existing SBC and then this is like a cash bonus added on top of it? Yeah.
I haven't really understood it yet completely. It seems to me that rather than just giving the normal RSU, they are giving less RSU compared with the other quarters, but more of these SARs, exactly in order to incentivize employees. Just a little detail to give context, that Monte Carlo simulation stuff that you mentioned is essentially how the people who need to write the 10Q need to write a number. So in order to say, okay, how much this actually cost for the company in actualized value for the quarter, they need to make this Monte Carlo simulation to give a number to put as the cost.
Right, because they're looking at the growth of the company, the potential projected growth, how much dilution would happen, and then how much it would cost management to even give out all that money. And their argument is this $50 price and that $20 delta is like what's the most fair for the company, which is bullish to an extent because it means that, I mean, $70 by 2029, I don't think anyone would be upset with that. But it's just a question if they can get there. Matt, you actually work at a company where you get stock options and RSUs and things of that nature. You probably haven't dug that deep into what Arny found, but on first glance, what does it mean to you? And do you think it is the right alignment with employees and shareholders?
So I agree that there needs to be a performance component and there needs to be a time component. So I won't go into too much depth about UDOC and things of the like, but there needs to be some sort of time-based component strictly based off the fact that you want to retain talent for a certain amount of time. And so it gives you, let's just say if it's substantial enough, and let's just say it's 20 or 30% of an annual salary or something like that, that vests over a 5-year period, then that's going to be like, well, I'm going to forfeit X amount of dollars if I leave this company. And it's also a bargaining chip to another company that, let's just say they want to go to Google, then they would say, well, I have this amount of shares remaining, and Google could either say, well, we'll buy them out or not, right? And then that's another bargaining chip that either would make somebody go to Google, or they could be like, well, I'm not just going to walk away from $100,000 worth of options, right? And so there's that piece. But I also agree with the performance-based aspect of it. And I've seen several companies in my industry, specifically not technology, but in the oil and gas industry, where if you align a company towards these, what they call BHAGs, big, hairy, audacious goals, and align people to what you really want it to be, then it's amazing what a group can do. If you can really focus people and say, this is the target that we need to get to in 5 years' time, then you can see some really remarkable shit happen. I've seen companies say, hey, if you meet this goal in 5 years in terms of production numbers or revenue numbers, etc., we'll buy everyone in the company, from the janitors in the company all the way to the CEO of the company, a $75,000 car or a $50,000 bonus. You could use that money to buy a $75,000 car, or if you don't want the car, you could just get the $50,000 cash. And a lot of times, believe it or not, they hit that goal. So, I think if you were to say, and I'm sure what this is by 2030, if we hit the, $50 stock target, then everyone walks away with X amount. But the thing is, and I've seen this do this a little bit differently in different organizations. Some of it's performance based, some of it's tenure based. I get that. There's a component to, specifically when you talk about like the C level, right? The executive suite, where majority of the time, a lot of those guys get their options based off of performance anyway. And so my question is, and this is one thing that I've got to ask Arny here, is does it explicitly say within any of the documents you've looked at, or specifically this 10Q, and I have it up here as well, who in the organization gets this, or is it specific towards everybody? And that's an important piece as well, because we had something similar at UDoc for a particular 4 or 5 year time period. And depending on where you were in the organization, some of it was performance-based and some of it was time-based. Or some of it was both time-based and performance-based, and some of us, the lower-level employees, are strictly time-based. So
yeah, basically your question is this just for engineers, or is this for like...
Exactly. Is it just C-level employees? Who is it?
I don't think it's just for the management, because the management is already well compensated with options. That's typically they go to compensate the management. From what I read, these SARs are more a way to compensate employees. Now, I don't know if all employees or only the engineers.
Dude, you can't discriminate against employees, though, right? You can't say the product managers don't get this, but the engineers do. Is that a thing?
Well, maybe just the degrees changes. I have personally no idea, but I think it is really important to have like all the company aligned. So since we don't really know who gets what, I think it would be great to have all the company aligned. Like the management is already very aligned. The problem that personally I was facing before as an investor without having this component is, yes, you have people that receive stock-based compensation. So they receive stocks and they want the stock to be more valuable. But if they receive stock just for working, and with RSU, every year you vest your shares. So it's like if you work 1 year, you get the shares, you get 2 years, you get more shares, and so on. But it was missing a component of performance. Now, I would have personally preferred a performance based on revenue or free cash flow, but I can't complain. Like I like the idea of the management being aligned with employees, being aligned with shareholders, because let's say that if a stock goes to 50, just to break even, to 70 in 5 years, we can't really complain.
Yeah.
Okay.
Yeah.
And
I mean, like, go ahead, Vince.
No, do we know that the only thing that makes it vest is the stock price, or is there any other?
No, it is the stock price. It is explicitly said the target is 50 with a maximum of $20 per SAR, meaning $70 at most. I think the important thing to underscore here, since everybody is freaking out, furthermore dilution, stop it, is this is a mechanism to have alignment without issuing new shares, because the payment is done in cash. So let's say the stock goes at 70, each employee for each SAR receives $20 cash. So can Palantir actually pay that? Well, having 4 billion in cash actually helps that. So if we go through the previous case saying all like the maximum premium $70, so $20 per SARS, the math is almost $900 million. So the question is, would you pay 1 billion out of these 4 billion while you are very free cash flow positive to have all the employees aligned as a sort of bonus? Personally, I would.
But by the way, it's not for... I was just going to say the cash by that time is like, if you just assume 1 billion per year, then it's like 9 million.
9 billion, yeah.
9 billion, yeah. But it goes back to what Arny said, right? So $50 is the trigger. If we're using the $70 example, that's 880 million, right? So 44 million times $20, they would have to come out of pocket 880 million, which to me, if that's once every 5 years, if they do something like this once every 5 years, I'm fine with that because they're already churning out $600 or $700 million a year now, and they're only going to grow to, just like what Vince said, probably close to 800 million this year. Next year, it's going to be over $1 billion in terms of cash going to the bottom line and being in the bank. So you're getting to a place where if you could spare 20% of that cash flow to keep employees happy and align the company to continue to grow further, then to me it's pretty fine with me, especially knowing that they've been able to grow revenue pretty substantially, keep cost basis down. And if this is going to continue to help with that and keep cost basis down as well as dilution down, then that's only beneficial for us in the long term if you think about it in that perspective.
Do you think this is the right way, or would you have expected something different?
I think this is the right way. And the reason for that is because even if there is dilution and there's some, weird ways to get to the $70 number, all we care about as shareholders is that the stock is $70, right? Most of us have averages below 20. I think even by then, if we average up to $20 or something, or $18, $22, stock's at $70 in 3 years. I mean, that's like, I don't know how much better it could get. Like, it's $20 today, 2024, 5 years, it's $70, assuming like the best case for the stars. That's a nice return. That's more than a 3x, actually. It's like not every stock can be Nvidia that goes up 115% in 1 year, right? But, and in 70, one could argue is conservative. Now, I will take the other side and say 70 is pretty optimistic, but still, that's good. So even if there's dilution or whatever it has to be to get there, if we're all sitting pretty on our shares, and at that point the company's well established and there's no way they're going bankrupt and all these other risks, we just have to wait for another 5 years for this thing to maybe be 140, right? And really get to the levels where we can make real good money.
What's really interesting is, this is like accounting trickery, and like what I'm explaining is you need to give pay to the employees, right? And then if you give stock-based compensation, it's like you're giving the pay but not in cash, and then it doesn't, like, that's why you can have this adjusted EBITDA, right? Yep. But then you can offset it by buying back shares, which is like, it doesn't go on your bookkeeping, because buying back shares is not a cost, as far as I know, in the company's bookkeeping, right? So it's like a little bit of accounting trickery. Like, and then this one is like you're giving out the cash, so it's going to come on the P&L, I guess, as actual salary for the people. But it's like, again, the same thing. You're giving pay to your, like, you're giving compensation to the employees. So it's just something to think with, that it's an additional cost, and you can call it stock-based compensation, you can call it a salary, you can call it SAR. It's just something to think with.
Yeah, I agree. I think it's the right incentive structure, and hopefully it plays out. Let's move on to this topic. This was interesting. This came out a couple days ago as well. Palantir partners with Proxet. Proxet, for those that don't know, is an IT-based global full-service software engineering firm. Essentially, think of them as a company that will work with you as a small business to implement at least one of their core 5 offerings, is implementing Palantir Foundry in your business. So if you're a new restaurant and you're doing 50 million a year, you sign up with Foundry, you get situated, you could use Proxet in some capacity to implement that across the entire organization: fintech, e-commerce, healthcare, life sciences, real estate, etc. So what's interesting about this partnership is Palantir made it official with Proxet. To my understanding, there are hundreds of thousands of firms across the entire world for AWS, GCP, Azure, etc., because those are multi-$100 billion businesses. At this point, AWS is a $100 billion run rate business. And so there's going to be a lot of not only independent consultants and certified developers, but entire firms filled with these consultants to help implement AWS services across an enterprise. I think the bull case CodeStrap has been talking about, it's like, why aren't there thousands of those for Palantir Foundry if Foundry is better than everything else? Arny, what was your reaction to this? And do you think Palantir is trying to encourage more IT consulting firms to start using Palantir as one of their core offerings to help organizations? And Chad right here in the chat says Proxet is great. Vald, their CEO, maybe he meant to say Vlad, their CEO is great as well. Yeah, Arny, what was your reaction to this?
I love to see these steps into building what's called the ecosystem of the channel partner. What it means is Palantir not selling directly, but essentially having other people selling Palantir for Palantir itself, which could reduce margins a little bit at the beginning, because if you have a reseller, this reseller needs to have an appealing price compared with your own. But it can really fasten up the adoption, which is exactly what we want. From that tweet you made, I think there's an interesting sentence that is worth underscoring. Well, go on your comment, because I noticed that you put it. There was okay, no, because there was a specific sentence. Our clients range from very big clients to small, medium enterprises. So that's how Palantir is willing to take the entire market. I think that Palantir itself want to focus on the biggest customers, the ones that really want to have like the direct relationship with Palantir, like also the big tech I learned do, like companies like Microsoft and so on. They have only a very small percentage of the total clients they have direct relationship with, probably the most important, the most strategical partners. And then you have all the horde of resellers that actually sell the products for you. So
dude, people have made like tens of millions of dollars just selling or reselling software.
Exactly.
Or implementing it for a company.
Look,
like, these are big businesses.
Look, this is like maybe there's a better analogy, but let's say you have the only legal steroid for bodybuilding. Okay. Well, in Italy, very, very legal steroids. Okay. But let's say you are the only one who can sell a steroid that on paper is legal, but the same, but it brings you the same output of the illegal substances. That's the opportunity for the reseller to make a lot of money. So since Palantir has a very good product, the only problem is it needs to be discovered. The people who know this secret can actually have a very big career opportunity to resell. So I think the incentive is very strong. The execution needs time to get implemented. And I would say there's an important feedback loop that is worth underscoring. The more Palantir is known, the more Palantir is appreciated as a brand, the easier it is for this third-party network to actually sell Palantir, not sell.
So, no, I agree. Go ahead. Finish the last sentence.
So over time, if Palantir reputation increases, and that can come from very big successes, having success also on the government side, being Palantir associated with we solve very big problems for real, then you have a number of network that is just increasing, the third-party network that increases, and it becomes easier for them to actually resell, because it is not them selling, is the client saying, I want Palantir because I know Palantir is very reliable and helps me solve a problem, not like Snowflake that just brings my data there.
Yeah, and I think there's a couple points to this, because we have Accenture, which is like a huge third-party consulting network for us. PwC, obviously CodeStrap works there, and then Carahsoft, which is the largest reseller of software in the United States to the government. That's a reseller, but Proxet seems like more of an IT consulting services firm that helps you implement it versus just reselling it. We'll get to Matt in a second. Vince, what were your thoughts on this partnership?
Yeah, I mean, I was very happy to see, and my thoughts were that it will become easier and easier to have Palantir as a software in your company, because you're more and more secure that you're able to get the help that you need. And my understanding is that when you do AIP with a company, you need to have like IT-oriented people in your company already.
Yeah.
And then they can use AIP to basically build your company's data on this. But what if you're, a bunch of doctors in a company and nobody does IT, right? Then the Palantir AIP bootcamp is not so sexy for you, because you're not going to do it. You're not going to understand it, right? but then you can hire a company like this Proxet, if I said it correctly, and then basically they implement all these things for you, and you can feel safe and have the same system. So I think it's a very good way of scaling AIP and Palantir to places where they couldn't go before.
Matt, your thoughts on this? I'm assuming you've worked with some of these consulting firms before as well.
Believe it or not, no. But talking to some of my friends that do work in some of these consulting firms, it makes a lot of sense. And it goes back to what Arny was talking about with respect to the brand. I still think that Palantir has a brand problem. I think it's, in a US sense, has gotten better just based off the fact that they've put themselves in the right situations to help the United States. But I think globally, there's still a huge problem. So if you're able to align yourself with the PwCs, Ernst & Youngs of the world, McKinsey's of the world, and have them literally being trusted from a accounting perspective, from a tech consulting perspective, and these guys are saying, hey, we go around globally, and this is what we think based off of hearing your problem, you should implement in your organization, and we think you need to implement Palantir Foundry, they'd probably be more inclined to use it than if some Palantir Foundry salesperson calls them and says, hey, right? So, I mean, these are the same people that are trying to make sure that people get the right cloud services set up and everything like that. If they can then work on top of that and say, Foundry is right for you, and they're saying, hey, we just worked with this other company in, say, New York, fixing their metro system or something like that, and they go to a different metro system in, say, Chicago, and they say, this worked for these guys, why can't it work for you? And it's coming out of McKinsey's mouth, or it's coming out of E&Y's mouth, or PwC or Accenture's mouth, rather than some sleazy salesman, I guess you could call it, from Palantir, then it's going to mean a lot more, right? And that helps the brand, that helps the overall build. And to be very honest, that's what happens in the back doors of a lot of these conversations. And that's okay. It's not to say like magically E&Y is going to get a cut or magically PwC is going to get a cut. They're there. They're consultants. They get paid based off of the fact that they're putting these slide packs together. They're helping come up and find the solutions for people. They're the ones that are literally just like the middlemen connecting the dots between the companies and Palantir. And so it's symbiotic for both Palantir and these consulting companies because, one, Palantir gets better brand recognition, more clients, etc. And these guys have another solution that they could feed to people. So it's a very good way to kind of go about doing it. And also, a lot of these big four consulting firms are actually global as well. So if you're able to get them on board, you know, they're going everywhere globally across the world. So you don't necessarily even have to focus, oh, it's only in the US or what have you. I don't know much about Proxet, I'll just be honest with you. But if it's a similar sort of mechanism to get more sales just on a smaller level, then I say all the power to it. Get as many people selling Palantir and connecting the dots as you can.
All right. Let's talk about the winter time. Because in the winter time, we get some snowflakes. And sometimes those snowflakes, well, eventually those snowflakes have to melt after the winter is over. And sometimes their CEOs leave the company after selling 4 million shares, and they leave shareholders with a melting stock and with some earnings results that are quite peculiar, if I say so myself. All right, so I got a couple things I want to run through. Snowflake had their earnings. They grew 33% year over year. That shocked people because most people thought they were going to grow around 25, 26%. So they beat on their earnings. They ended with $4.5 billion in cash. They bought 3 million shares at an average price of $173. The stock fell to $145 in the quarter. So they didn't really nail the bottom, but they definitely got it, you know, not at the top at $237. They have about $900 million left. They raised guidance to $3.3 billion for the year, which would be 24% year-over-year growth. Palantir is at 21%. So, and Palantir is probably going to get to like 24, I would argue, by the end of the year. So on par with Palantir. And this quote from the CFO is really interesting. We are lowering our full year margin guidance in light of increased GPU-related costs to our AI initiatives. So their margins are going down, or at least the guidance for those margins, because they're starting to train or pay for services necessary to train their large language model called Arctic, which they are open sourcing for the enterprise. On top of that, Arny found a lot of interesting stats from them. He saw Snowflake spends 4x Palantir's costs in R&D, and one could argue they're innovating much less, given they are acquiring 3 companies over the past 18 months, looking like they might acquire another company, whereas Palantir is building everything from scratch. And Snowflake's stock-based comp over revenue was 40%, whereas Palantir's was half that at 20%. So the question is, are we all dumb and Snowflake's actually out innovating and really building, and they're spending the right money, and even though they're not profitable, they're growing a lot more, and they're really creating this major game plan? Or are we exactly as correct as we've been saying that, hey, like Snowflake might be a great company, but it's not the transformational enterprise software company that Palantir is, and these numbers are starting to creep up and show that the valuation is insane. The stock fell 4%. The stock really didn't rebound today, as we had a green day. And, ever since the CEO left, it hasn't even touched that 200 level again. What do you guys think is going on with Snowflake? Start with Arny and then Vince.
I think, as you said, the company is a good company. It's not a trash company. It's not a scam. It's just not that great company as the narrative that we were pushed in the last, say, 5 years since the IPO is. So now what we were talking about, the structural weaknesses of the business model, I think they're starting to emerge. Right now, the growth is not that stellar any longer. So it means that their core product is probably getting more and more saturated. Essentially, they reached already a big, like the biggest number of customers that could easily pay a lot for that has already reached. We're talking about a solution that is relatively fast to adopt. It starts scaling relatively fast. So that's why you have a relatively very strong net dollar retention. The problem is, so far, it doesn't really seem a product, a company that is set to scale massively. It is very fast to reach up to this point, but from here, you have the gravity going against you rather than helping you with like how it happened for Apple, Google, Microsoft, all these companies. The bigger they became, the faster actually they were able to keep growing. And I think that is part due to the product, partly due to the business, how it is structured, that relies very, very, very heavily on sales, which means in order to keep growing, you need to keep hiring new salespeople. 1/3 of a company is just salespeople. In Palantir, the proper sales are like literally like 1-2% of a company, something like that. So there's a structural difference with Palantir, and I think these comparisons, that the one I showed you, help seeing the dynamic. Even if they have a different company, different focus, this company is like one company scales, and Palantir with the same resources is able to keep building a new product. Like, remember, look, they built AAP here, the most revolutionary product for the company, and you never see a bump in the R&D. On Snowflake, you have this very strong line because, oh shit, we don't have a product here. Let's build another product. Oh shit, we don't.
Dude, that's a good point. I don't think anyone in their right mind, Brad Gerstner would say Palantir is more innovative than Snowflake. Okay, maybe he won't, but still. So but if we can agree that Palantir is more innovative than Snowflake, and this R&D cost is basically flat, how the fuck are these guys spending a couple $100 million every other quarter to build an LLM? To is that it?
And it's worse because then they end up buying companies. It's not even that you get new products out of this; they still have to do M&A.
Yeah. Well, when you make M&A, you start probably the M&A has contributed for this cost to go up, so the R&D to go up, because if you buy a company that has no revenues and just makes R&D, when you merge, you essentially start writing also their the R&D cost. But that's very telling in my opinion. What's the key difference between Snowflake and Palantir? Snowflake is more focused in selling a product, while Palantir is a platform. So having Foundry that they worked on for 10 years, building all that data infrastructure for their clients, but also for themselves, made Palantir very fast and very effective into building a new product, because it's like
you just build on top of it. You build on top of it. Yeah.
I mean, it's like AAP is just an additional module inside this very big ecosystem of Foundry. So it is not literally a module, it's a product, but it's like, since that is built on top of Foundry, you capitalize on 20 years of effing work, starting from Gotham, then to Foundry, then to Apollo, and then AAP is just another layer that for you is relatively easy to make, and it works because you have all that work.
Dude, I think it's so obvious. I think the 60% of institutional investors that are buying into Snowflake are buying into high growth rates that are not buying into a vision. And with an enterprise data software company, I don't think it's just like Mark Benioff had a vision, dude, when he built Salesforce. And not every enterprise data SaaS company has to have a vision, but what are investors expecting from Snowflake? They're expecting 400 or 500 billion market cap one day, right? Or at least 200 billion, 250, which is a CRM. What's the vision for Snowflake? I understand the vision for CRM. I understand the vision for something like an Oracle. I don't really know and I definitely understand the vision for Palantir, even though they're much smaller than those companies. I don't understand what the vision is for Snowflake. On top of that, here's one stat before I get to Matt that I want to mention. So Snowflake here has 485 customers they listed in their current earnings that are paying them $1 million or more. They have 9,500 clients. So basically 9,000 of them are paying like, $10 a month, $1,000 a month, whatever. 485 are paying $1 million. Palantir has 557 customers, and all of them are paying $1 million or more. I mean, or at least 95% of them, right? You could basically say the same amount of customers Palantir has, because every deal they close is at least worth $1 million, something like that. There's probably some that are paying less than $1 million, but all of them are relatively paying at least $1 million. Snowflake has 9,000 customers not really touching that level. So it's interesting to me. The reason I bring this up is because I still like that Snowflake has so many clients, because that's just more momentum. But I think it's interesting that Palantir has the same amount of clients Snowflake has, paying them the same thick amount of revenue, right? Millions of dollars a year. And now Palantir just has to go down to the SMBs. Whereas Snowflake, it seems like they've captured the majority of the value in the big enterprise client space, because that number is not going up that much, but the average client is going up, which is like your mom and pop shop that can download Snowflake immediately. If that starts to scale for Palantir, which every indication seems like in the next year that will start to scale, Palantir will be on par with Snowflake in terms of thousands of customers, even if 90% of those thousands of customers are just people paying $20 a month, and they're gonna have a vision, and they're gonna have innovation, and they're gonna have way better stock-based compensation compared to revenue. So to me, I think it's kind of clear what's gonna happen from that perspective. Matt, your thoughts on any of these Snowflake's earnings if you got a chance to dig into them?
Yeah, a little bit. So we do own Snowflake in the public portfolio with Chris. So it's a couple shares, so not very large. Actually, after the earnings bump initially, it went up like 10, 11% after hours. I asked Chris if we could sell. He said
no, because Chris got cocky. Chris got cocky.
Chris got cocky.
So on my morning open, it's up 5%. He's like, I told y'all Snowflake, and then market rings.
But going back to the actual earnings and the company itself, I mean, you guys aren't going to, I'm not going to say anything new from what you guys stated. Companies can grow inorganically and do it extremely well, but it is very difficult to do. But we have seen it executed very well. Salesforce was mentioned. Broadcom is another that has done absolutely phenomenally by doing inorganic. But Chad said something earlier, which is 100% true as well. The integration piece and making sure the cultures fit and align, and how people just fundamentally understand how to do business and how to operate as an entity is very difficult. So when you're doing those things, there's a lot of churn. And with a lot of churn, people's tendency is to throw more money at it. My hope is, I'm not very bullish on Snowflake. I'm more of a Palantir guy. You guys know that. But my hope is that for Snowflake's sake, that R&D cap or that R&D cost budget isn't going up because they're churning and they're just trying to throw money and people at the problem rather than trying to actually fix the integration piece. That's my hope for them. But I will just say, from an observer of business, generally speaking, the synergies that people predict when you incorporate other companies and merge with other companies generally doesn't get realized. And my fear is if you're a very sales-focused organization and you don't have the ability to integrate well other companies that you're buying and non-organically using to grow your organization, to me, that's a tough thing to sell. Versus if you were to have an inorganic event happen at Palantir, they are very technically capable. And I feel like the ability for them to absorb and synchronize with a new organization, yes, there's definitely going to be culture shock. Palantir is a very, I would say, headstrong organization with a very unique culture. And I don't mean that in a bad way. But if you were to have an inorganic thing happen at Palantir, I have a feeling they would take very seriously the integration of how that would fit into their business, one. And then two, they would think very long and hard before they did it. So, to me, as a person who's an investor, going back to why we're here, which is Palantir Weekly, I personally would rather invest in the company that I've observed personally that has extremely unique culture and is a culture focused around technical excellence rather than a high sales focused organization, because I've seen so many people that are focused on sales try to inorganically grow and just absolutely stumble.
Yeah, and as we can see right here in this, I think all those are good points. I mean, when you try to acquire a company, it's very difficult to get them integrated. I was watching an interview with Vlad from Robinhood today, and he was talking about maintaining culture. Culture's hard. They acquired a credit card company, and the only reason he worked, he said, is because they were also Stanford math grads. He was like, that's the only reason we all got along together, because we were all technical. Otherwise, it's difficult to do this stuff. This is a picture of AWS customer base by spend level. And as you can see right here, 86% of their customers have a very tiny spend. 3,351 are the ones that are spending $100,000 a month. When we look at Palantir, I think this is actually a really interesting point that I thought of like 5 minutes ago as I was looking at these stats. Palantir has 557 customers that, to my knowledge, all of them, or at least 85% of them, are paying $1 million or more, right? They're spending, that's called basically $100,000 a month. Snowflake has 485 customers spending $1 million a month, and then they have 9,000 spending basically what this Amazon chart is looking at, right? Like less than $1,000 a month. So the vast majority of value, that's why Palantir is able to put up $2.6 billion in revenue, even though they only have 1/100th of Snowflake's customers, because the majority of the big customers, the BPs, the Airbuses of the world, they're paying Palantir. So the question then becomes, can Palantir just scale down to the game that Wall Street likes, which is, oh my God, they have 9,000 customers. If Wall Street really cares about that, can Palantir get that and have a vision and have a CEO who doesn't fucking leave, right? Versus a company like Snowflake that's fishing for the next thing to acquire. And I guess we'll see if it plays out. Arny?
I personally didn't we discussed about the stats of Snowflake, 9,500 only being bigger than 1 million. Personally, I haven't realized that that's comparable with Palantir's total customers.
Yes.
And that's very, very telling, because implicitly that tells you that almost all Snowflake revenues are generated by these,
I thought of it 5 minutes ago. I just realized when I looked at the 485 number, I was like, wait a second, Palantir is...
No, I think it is important to make a distinction that also the stats that we shared previously about AWS refers to the number of customers, not the revenue generated for each layer. And probably the 0.1% of those customers, of those paying very, very much, are contributing to the overall revenues a big chunk. So it's not that all the revenues from AWS are done from these small clients, and it's also not true that all the revenues from Snowflake are generated by these small guys or these other guys. So we don't really know who generates what. In the case of Palantir, we can know that half of the revenues is essentially made by 20 customers, and since we know that also the other non-top 20 tend to be very big companies, it is absolutely reasonable to see them in the average. Maybe they start with 1 million and then they scale up to 100 million or whatever. With Snowflake, the product is thinner, is more about having this small product that you just scale to the biggest number possible. So that's very telling. If Palantir can find the right key, and we know that they are experimenting now with AAP now being accessible with a credit card, they are experimenting this key to open the door to these smaller companies. I think it is good they're not just spreading it out. They're just trying to make it very carefully, because once the gate is open,
Yeah, 100% agreed. And I think we're gonna be right on this whole Palantir Snowflake debate, dude. I mean, like, I just like I do think Snowflake is quote unquote undervalued because it fell so hard. But the more I dig deeper into them, like, what am I investing in? Every time I hear someone give me a bull case, it's like the enterprise data solution for AI, or like the data integration layer for AI. And it's like, I don't know where the AI is. I don't know why they're working on this open source LLM. 24% year-over-year growth. What if Palantir does 24% year-over-year? Like, which I think Palantir will guide for closer to 25 by the end of the year, even if it's 23%. It's like, what are we at invest? And Palantir's at a way better valuation. Snowflake's at like 60 billion. Palantir's at 48. You know, it's, I don't know. I think we're gonna be right on this one. Okay, last topic for today. We'll end it off on this topic. The stock. The stock is flat. So even though we think we're right on Palantir versus Snowflake, we'll see what happens. So far, the stock has gone down about 25% after earnings. I've been getting a lot of messages. I'm sure Arny, Vince, Matt, you guys have just in your comments, well, Palantir is flat. It's not moving, yada, yada. The market's up, S&P's up, Nvidia's up, Palantir's flat. Vince, how do you deal with those comments, and what advice do you have for someone who is upset that the stock is moving?
It's really weird. I haven't gotten those comments or messages.
Okay, I'm getting a lot of them.
Yeah,
a lot of them under my videos.
Yeah, and I didn't even get them for Rocket Lab, so I don't know. But the way I would be dealing with it is looking at if you can add, because okay, first is like you have to look at, okay, is it the company that is going down, or is it the stock that is going down? And I've been making videos about how I think that Wall Street is missing Palantir again, because they're looking at the backwards looking indicators, and they're not looking at necessarily the forward-looking indicators, like how many new customers they're doing, what is the new deals closed, what is the, you know, the remaining deal values, and that paints a very different picture looking forward. So I think that there's very good times coming. So when you look at that, and when you see that, okay, the company is executing amazing, stock price is going down, then you need to see if you want to add. And that's more where I'm at. I'm all in on basically Palantir and Rocket Lab. If I had money, I would probably be adding to both. But yeah, that's how I'm dealing with it.
Matt, I want to go to you next, but one thing to mention on this as well, Palantir is still up 30% year to date. And one of the things my thesis is that if it was up 15%, you know, we would have something more to look forward to. But up 30% is like, we just got it so quick. You know, like we came so quick. Have some experience in that, but we came so quick to that 30% that it's just like, now it's hard to get more. So Matt, what are your thoughts on coming quickly to 30%?
Yeah, it sounds like you've been talking to my ex-girlfriends.
Oh, wow.
So right. Yeah, there it is. So actually, you and I had a conversation at your closing of the week this week on a live stream.
Market close. Yeah, you bought 500 shares today, right?
So I did buy 500 shares.
This is why I'm too good at sales, dude. I talked to you for 2 minutes. I made you come so quickly to the conclusion that you need to buy share. I can get people to come quickly.
It's not atypical for me. So I mean, it was something that was in the back of my mind, and talking about it out loud. You know, I was just like, you know what? It's $10,000. Let me just buy another 500 shares. And then I did the same thing with Rocket Lab. It was like another $10,000. And so there's just a position that's been sitting in my portfolio, and it's not a bad position. It's just, I've moved away from, say, dividend focus and moved more towards either specifically focus on the S&P 500. But anyway, so I think just in overall, I don't think $21 is a bad price. I think it's not the best price, but it's definitely better than $25. I know plenty of people that were buying at 24, 25. If they're not buying here at 21, I don't know what to tell you. It's the same thing that we dealt with in 2022 when people were like, I don't know, I was buying at 10 or 11, but now that it's down at 7, it's just like, my guys, you had the opportunity to buy it at $7. If you were that convicted and you continue to see how it's executed, we're literally 18 months from there, up 300%. Or 200%. I don't know. I'm not good with math. You guys know that. But we're up, you know, from $7 to $21 in the course of 18 months. And we're only continuing to see the company move in the right direction. yes, you can see that it's slightly overvalued if you were to look at it that way, but who's to say it's not going to continue on this 20 to 30% growth path that it started to kind of establish itself on? I think Arny probably has this graphic better than I can explain it. But we have all seen how everyone's been like, well, growth went from, when we DPO'd from 50% annualized growth down to 16% in 2023. And now we're starting to trend up towards, or it was like 11 or 12% at one point in one quarter. Now we're trending up towards 21% year over year, which is impressive considering now you start to incorporate the rule of larger numbers into that whole thing. But if you're able to maintain 20%, 30%, that's nothing different than what Salesforce has been able to do its entire life, right? You don't need Nvidia-like growth to be able to massively move the stock in the right direction. And in fact, the way that Palantir does everything, you just saw the R&D budget and how steady that was over time. If you look at their operating expenditures, jails and centers administrative, all those things, they're steady like a rock. And to me, that just means they're able to focus on polishing what they're doing, establish a firm base in all these organizations, and really mind how they're growing. And they're growing with a value and efficiency in mind rather than growing at all costs. And to me, that means you have staying power. To me, that means you're building a fortress. To me, it doesn't mean you're going to be in these pendulum swings like you see a lot of companies where they're hiring 10,000 people, then they're firing 5,000 people, then they're hiring. To me, this just means that Palantir is building an organization for the long run, and they know what they're doing. So to me, I think $20 is a pit stop. Could it go down to 15? Of course. But for me, I think $20, $21, who knows? Some news might come out and you might not see $20, $21 ever again, especially we're getting close to, we only have 1 month left in the quarter. A month and a half after that, we're going to report probably in the early August, or maybe it's, probably early August timeframe. We're going to report earnings. So in that respect, you're a couple months now from getting another earnings report. And who's to say you're not going to jump up into the 25 to 30% year over year growth range. So anyway, I bought more. I have $17 puts as well for August 2024 for another 500. Yeah, another 500 shares. So either gets executed or I make a couple $100. That was kind of the thought process there. But to me, I've always wanted to get this to 5,000 shares. I'm at 4,500 now. Would I get it to 1,000 shares? 10,000 shares? It might be a tough ask, but if I see some opportunity to sell some other things, I maybe be able to get it to 10,000. But for right now, I'm aiming for 5,000, and I have 500 to go.
Yeah, and I also think like when it runs, bro. Like if let's say we have a good earnings and we get a rate cut, right? The macros in the right kit, and this thing goes to 24, 25. Then everyone's like, oh man, I'm missing the train. I got to get in. And it happens. I mean, we saw this with Nvidia. People are buying this shit at all-time highs, and it's going higher today. Go ahead, Vince.
They're selling the market to buy Nvidia.
Literally.
Yeah.
The liquidity is there. The liquidity is there. The money's there. I think the market's just kind of wait and see. I love 22 and below. I really do. I bought like 250 shares this week. I like that price because I don't think it goes below 20. And I don't like 24, 25 buying at that range, right? Go ahead, Vince.
I think that there's so much money waiting on the sidelines for a good dip. So I think it's very unlikely that we go below 20 because secretly, I think a lot of people want to own Palantir.
Yeah, if it goes below 20, I think it's a load the boat. But I think if we stay stuck between 21 and 20, that's an easy buy for me. And I think it makes sense. Arny, what are your thoughts on the stock being flat and not really moving over the past couple of weeks?
There is that gap, that sexy gap that is there, and everybody is waiting for that gap to be filled. And that's possible. Like at this point, probably the stock is supported by also by Wall Street. I found this chart. I'll show you. Give me a second. Sorry.
While you're bringing that up, 229 funds bought Palantir. If you go to 13Gs, and about the top 5 of them added about 2 million shares each on those funds, and Stanley Druckenmiller with 770,000.
So we see from this picture that the violet line is the average target price of analyst since the IPO, sorry, the DPO. And what we notice is that this level tends to act as a support or a resistance. So it was a sort of resistance up to during the downtrend, but since Palantir broke the $10 range, then this level became a support. What this tells us that essentially now institutional investors mainly are happy to support buy the stock when it is aligned with the target analysts have. As soon as it detached too much, like 20%, then many people say, okay, it's time to take profit. But if we combine this information with this other information, this chart, the institutional ownership keeps rising. So every time the stock dips and it gets closer to these analyst targets, institutional investors are happy to buy. Now, what that tells us? That probably below 20, there would be even more people happy to buy. That is not a certainty that could happen. Probably it would be more a matter of macro, let's say a shock that triggers people fear and people sell everything. That could happen. But I think we all agree that now something that is in the 15, let's say $17, $18 range would be very value versus the current price, which I consider in the okay range, while probably something more fair is around the 25, 28. I typically see I'm more aligned with Mariana than with other analysts, and I consider Wedbush sort of like a long shot.
Yeah.
Because Dan Ives tends to be more positive. I would say on my personal level, it hurts because this deep, since I went all in like at the previous 20, so just before the earnings, I got like that crazy ramp up, included the plus 8%. And then a rational Arny would have reduced a bit to say, okay, it's not worth staying 100% still. I should have reduced, and now since I got this hit of minus 20%, it's like like it hurts. But structurally, it's not a problem. It's more a matter of waiting the valuation. The growth really enters the valuation, and we know that since there is a very strong interest for AI, and that is seen by Nvidia, and so on. It's like we are not smoking weed here. Like we see that the demand is real, and sooner or later that demand will transfer also to software enterprise. As we mentioned many times here, you stack up all the GPUs you want, okay, but what really matters is what you do with these GPUs. Having GPUs doesn't make you make money,
More
doesn't
valuable.
make the economy works. You need to build things on top of this. And Palantir is probably the most valuable solution so far. Just another data point that, in my opinion, is worth mentioning. Scale AI, so a company that, in my opinion, is relatively weaker than Palantir, has just made another financing round at $14 billion revenues. Sorry, a $15 billion valuation. And this company has like a $700 million run rate. So more or less 20x sales. And the simple reasoning I had is if this company says this is the latest round before the IPO, it means, and they included like literally their cap table, meaning the investors that are in the stock is crazy. You have on the one side the best of the venture capital. So Founders Fund, Index, look at like Tiger Global. You have all of the biggest ones, And on the other side, you also have companies, ServiceNow, AMD, Cisco, Intel. It's like everybody is into this, how in the same way everybody's into Unreal. So probably Databricks, Scale AI, and Unreal are the most anticipated potential IPOs. And guess what? Palantir is the perfect company to make the comparison with. So if you're a banker, you don't have many solutions in the public market with which you can price the IPO. So there is a very strong incentive from Wall Street to actually, I can buy Palantir in order to front run the IPO. And it's all a matter of time.
What Arny's basically saying here is that Scale on the private markets is worth 14 billion, which is close to half of Palantir's valuation, a little bit less than that. Once Scale goes public, which when you raise money from the companies they raise money from and the funds they raise money from, they have no choice, but either it's a fraud or it's going public. Like they will go public. So the question is when. And if they do have to go public, Wall Street has to hype up this IPO, which means comparable AI names have to get a premium. Otherwise, why would you give Scale a premium? Because 14 billion already when they're private, they've got to IPO at something like 25, 30 billion, which means Palantir should not be worth only 50 billion if they're being worth 30 billion if Palantir is a much better company.
Okay, do you know how much paperwork you need to do in order to make a funding like that? Like, that's annoying. So if you are committed to the deal, it means that you expect to make at least 2-3x. You don't make a private deal to get 30%.
Yeah, 100%. Agreed. All right. Nice stuff, guys. That's it for us on episode 121 on Palantir Weekly. Any final thoughts, Vince? Anything you'd like to say?
Well, I mean, just patience is a virtue, and I think we're undervalued here. And if you're worried, just look at the big picture and for sure hold, see if you can add. And by the way, there was a very good Tesla video that I posted on Twitter that was going back 5 years and what the news and analysts and everybody was saying about Tesla. And I really recommend people to just watch that video because it was so interesting that at that time the stock was like 1/10 of what it is, and people were like, we don't know if there's demand, Musk is too crazy, he's tweeting too much, and you know, like what played out 10 years or 5 years after. And I think that Palantir is going to be one of these companies that we're going to look back 10 years from now and like, shit, I should have added a lot more than what I had.
I agree. Matt, any final words?
Not really, man. I think people just need to evaluate where they are, you know, and understand what is their purpose for investing in Palantir. Are they looking for a 20-30% rip up? You know, that could happen during an earnings report. But if you're looking for something that you think could potentially be a $200-300 billion organization, or eventually maybe in say 20 years time, $1 trillion organization, you know, that's where I'm in it for, right? I think if you think about this company, what it could achieve from a financial metrics perspective, yeah, you're paying a couple years ahead for what it's going to be churning out in terms of cash back to the business, right? I'm thinking you're probably paying prices today that you'll start seeing as a decent valuation in 2027, 2028. So yes, you're paying ahead of time, 40x sort of price to earnings ratios, et cetera. You know, it'll grow into those things in a couple of years time, but you're not doing anything different when you're buying Google or Amazon. Yes, it might not be as rich of a valuation, but just think Palantir is kind of in this no man's land at the moment of, will it go back to 30% growth? Is it going to stay in 20% growth? And if it does go to 30% growth, my current stock target valuation is going to be blown out of the water. But for me now, just so everyone's kind of aware where I'm at, and I need to update my article since the 1Q earnings dropped, the current valuation that I have for year end 2024 is $25 a share. I'm fairly confident that the pendulum will swing, as I wrote in the article, between $20 and $30 a share. But I'm fairly confident that $25 is is the price that it'll kind of land at once we kind of get through and move into 2025. And that's honestly great growth. If you think about it, from the direct listing in 2020 to ending 2024, a couple of years later, being up $15 a share, that's pretty impressive. That's over 150% growth in a matter of a couple of years. And the company is way better financial frame. They're actually delivering to the bottom line now. They're growing cash. They started with like 1.9 billion back then in cash. Now they're at over $4 billion in cash and growing on a daily basis. So to me, it's a maturing company that is still in its not even teenage years.
Yeah.
And I'm very excited to see where this thing holds in the next 20 to 30 years. And for me, I probably never sell shares. I'll probably sell covered calls and use that money to buy other shit.
Basically, we're all going to be fucking rich. Or we all go broke. So it's one or the other, dude. It's like there's no you make a little money here. Either this investment sucks and Palantir's maybe like $40 in the next 6-7 years, which is just not the best return, or Palantir's like $150, right? It's one or the other when you're in Palantir.
Okay.
And that's the fun.
Would we be broke with $40 Palantir?
No, we wouldn't be broke, but dude, the opportunity cost would be pretty high, dude. At 20 to get a double in 7 years. I mean, I know that's still good, but I mean, you could. I think Google will more than double in 7 years, or Apple, or Amazon, So it would be an opportunity.
Going to zero?
Well, I don't think any of them are going to zero. That's the point. I think Palantir's not going to zero. But the risk is, does it be the company that we think it can become? And if it does, we make a lot of money. If it doesn't, it was a fun journey.
I have a feeling that when the product AIP is less than a year old, yeah. I have a feeling that within the next 12 months there would be another product drop. And I'm not going to look at Chad, but mentally I'm looking at Chad right now.
Well, dude, Carp told us that. Carp kind of told us that, right?
And I think that when you start to recognize that this isn't they had Foundry, they had that in the works. Oh, they had Gotham. Oh, they had Apollo. Oh, they have IP. This is going to be a company that drops a new product every 18 to 24 months that will be at the forefront of software. It'll be at the forefront of artificial intelligence. It'll be the forefront of defense tech. And
even FedStart itself. Like, I interviewed a girl today that she's not literally working at FedStart, but I can see kind of where it's going. Sham, is trying to work with them in drones and stuff. Like, there's so many different things that are happening here. And as you said, Matt, I think they've got a lot of stuff cooking up that we don't know about yet. And they don't have to acquire companies to do that.
For every software they want to build, since Palantir is essentially software to build software, we have seen that with AAP before. They have the entire infrastructure. They can literally build everything. And the fun stuff is that now with AAP that Palantir can use itself, they can become faster into building whatever thing. Another consideration, consider that all the modules that now are available on AAP now, so that sort of marketplace for AAP applications, all that stuff is stuff that also Palantir itself can use, apart from selling it.
Dude, when we forget, they got the fucking NHS deal. Like, I bring it up every pod because I feel like we don't talk about it anymore because it's old news now. It's old news. But like, I don't think there's any other company in the stock market that's as exciting as Palantir to invest in.
We got Titan. Like the stock is down, but we got the Titan. I think Titan.
We got Titan. Like, there's other stocks that will do much better this year. Like, there's plenty of stocks that will do better by the end of this year, maybe by the end of 2025. But in terms of actually investing, like not trading, not like, oh, I can buy some options here, but like, no, I'm putting my money here and I'm going to see how this works out over the next 5-10 years. I think it's Palantir. Yes, you've got the hyperscalers, you've got big tech, but that story's played out. Google was a get in the 2010s for the FANG, and those will probably still double and triple all the big Mag 7. But still, that story is that story. In terms of a new story under $100 billion, I don't know what other company in tech is more exciting than Palantir. I really don't. It's not fucking Snowflake. It's not Databricks. It's not Datadog. It's not. I mean, CrowdStrike's amazing, but cybersecurity's TAM I don't think is as large as what Palantir is going after. It's not Palo Alto Networks. It's not ServiceNow.
I think as long as America is around, and America being the military industrial complex that it is, Palantir will be a very well-suited company.
Well, that's the other thing I forgot to mention. This government part of the business is something Snowflake also doesn't have, right? It's a big deal. The fact that we're doing a couple, almost 1.5 billion just from the government, that's a really big deal, dude. And that's not going away anytime soon.
And the world is not getting more quiet.
Yeah. Yeah, we didn't even talk about China and Taiwan this week. But yeah, it's going to be hopefully a cool decade. And we'll see how it plays out. All right. That's it for Arny, Vince, Matt, and I. All of our Twitters are in the description. If you are not on Twitter, check it out. A lot of real-time Palantir information is there, so you can follow us and get a ton of interesting Palantir content. We'll be back next Friday for Palantir Weekly. Basically Saturday, because it's Saturday morning right now. And we'll keep going from there. Thank you, everybody. Have a good weekend. Enjoy the Memorial Day long weekend, and we'll see you guys next week. Bye, everyone.
Yeah.
Ciao, ciao.